What's up, everybody? It is Nico Moreno here, and I'm super excited to have you tuned in to today's video where we're going to be talking about what is compound interest, why is it the fastest and coolest way to accelerate your path to wealth, and I'm also going to show you some live examples of how it works in traditional investments and in a general sense, and also with Forex specifically, because you're going to see it's pretty cool. Forex is actually a very powerful compounding tool when used properly. So let's just dive right in. So a lot of you guys probably know what is compound interest, but let's just talk a little bit about the details to just fine tune and make sure that everybody's on the same page. So what compound interest is it's essentially when the interest that you earn in a savings or investment account actually earns interest of its own. So your interest is earning its own interest, basically. So what does this actually do for you at the end of the day? Well, this causes your investment and your wealth to grow at an increasing rate. Okay, so it actually grows not at a consistent, steady rate, but it grows more and more and faster as time goes on. So I'm going to show you an example of an equity curve in a couple slides, and you'll see exactly what I mean. But what this means overall is, for example, like in month 2, you will earn more than you earned in month 1. Okay, with your investment that is compounding. You'll also earn more in month 12 than you did in the previous month, month 11. And you'll earn more in year 10 than you did in year 9, right? So each subsequent time period, you're going to be earning more than you did in the previous time period. So essentially what this means for you and why is, that all got messed up, and why it's so critical for you and why it's so beneficial for you is because your wealth is constantly going to be growing at a faster and faster pace each and every day, each and every week, each and every month. So that is really the miracle of compounding. So essentially, what it is your money making you money. And then that money makes you more money. So that equals a big fat wealth. All right. So let me show you guys an example of an equity curve of simple interest versus compound interest. So simple interest is depicted by this blue line right here. Compound interest is this interest right here, or the orange line right here. And you can see like this equity curve, how this is growing at an increasing rate, right? Like the rate of growth right here is much smaller than the rate of growth right here, right? The line is much steeper. So with compound interest, where your interest is actually earning its own interest, that's the fastest path to accelerate your wealth potential and your income potential, right? And to illustrate this point even further, I actually learned about this, a few weeks or maybe a month ago. And I thought this was super cool, but 99% of Warren Buffett's wealth was actually earned after his 50th birthday. So I just want to say that to show you the power of like how powerful this is. So let me go ahead and zoom in right here. If I can do that, the numbers might be a little blurry, but so you'll see right here, they kind of did this data, and I don't know exactly how accurate this data is on this little like graphic image, but really the point is not so much the exact numbers, but the point is to illustrate the power of compounding. So you can see right here, this is supposedly Warren Buffett's age at the bottom, and then above is like his net worth, right? So you'll see at age 14, he had like $5,000. Then you go over to age 39, he had 25 million, 44, 19 million. So, something happened there. It maybe went down a little bit. But then you can see right here, like once the compounding has been going on for quite some time, like it just starts to explode at an unbeatable pace that you could never catch up to like by working, right? Like it's just, compounding is just like, it's a force of nature, really. And so, once you look at the little chart right here, again, I don't know, you might have to zoom in on the video. I'm trying to zoom in as much as I possibly can, but it's like 376 million at age 52. Age 56, it spikes up to 1.4 billion. At age 59, it spikes up to 3.8. And then, it just goes like absolutely nuts. Right here, it's like 58.5 billion. So really, the wealth that you accumulate at the very beginning of your compounding journey is really going to be insignificant compared to the wealth that you will accrue in the later years of your compounding journey. So, and right here, he says compounding is the greatest force in nature. So, now that we have that kind of out of the way, just in a basic sense, how does compounding work in Forex specifically? Because like I said, I've been utilizing Forex as an investment vehicle, And so I want to educate you guys on how this can potentially be a really powerful force for you to leverage as well. So, well, this is not exactly daily compounding, and I'll explain why in a little bit. I'll explain why it's not exactly daily, but it can be approximated as daily compounding. So for some context, for those of you who don't know, the Forex market is open 5 days a week for 24 hours on those days, which essentially means it is actually open continuously for 5 full days. So it's from Sunday night to Friday night. And then it closes for 48 hours. So essentially Friday night to the following Sunday night. So those 48 hours, it's closed. And then anytime a trade is closed, so that means, we really have 5 days per week to work with. We don't have 7 days per week to work with. Anytime a trade is closed as well, a Forex trade, those profits are immediately available back in your trading account. Okay, so that means the next trade that opens, it'll be utilizing the funds available in your main trading account. And so let me move myself out of the way here. I guess I can't do that. Let me make myself smaller. So meaning the next trade that opens, it'll be utilizing the funds that are in your main trading account. So the profits from that last trade that you just won are immediately used to fund the next open trades. Okay, so kind of visualize in your head like what that would look like. And really it sounds a lot like compound interest, right? Because like we said earlier, compound interest is when the interest that you earn in a savings or investment account earns interest of its own. And so in our case with Forex trading, the interest that we're earning, that's profit from closed trades. We're earning that on our capital, and that's immediately released back into our trading account. So then the more interest, which are trades, are opened using that interest from the previously won trades, right? So our account gets bigger and bigger. And as soon as those profits are released back into the account, the main account, grows by that much. And that entire account essentially is used to open more trades. So essentially with Forex, you are earning interest on your interest, which is compound interest. Now, I want to make this clear. Why is it not exactly daily? Okay, so the reality is because it all depends on how long the trades are kept open before they're closed, right? So a trade's profits can't be released back into your account until the trade is closed, right? So that's very logical. That makes sense. But there's different styles of trading, right? So one style of trading is scalping, where trades could last 5 minutes, or they're very short trades. And in that case, daily is accurate. Daily is an accurate way to model the growth, because the profits from the trade are released back into the trading account in 1 day or less, right? Now there's another style of trading, and there's multiple styles of trading, but just to illustrate, there's another style of trading called swing trading, where trades might last 1 to 3 days. Okay, so in that case, profits are not added back into your account until the trade is actually closed, which is going to be a few days. So in that case, you could either approximate using daily or weekly compounding here. If you want to be more conservative, with how you're modeling the growth, you could use weekly. You could also use daily, and it'll still be pretty close and pretty accurate. Okay. So I want to show you an example. Let's kind of zoom in right here. I just took a screenshot of this because it's easier for me to not have to go log into the VPS. Basically you have to log into this other terminal to kind of show the live trading terminal. But here's an example of one of the trading accounts that I have running. And you can see right here, in about the past 24 hours, it's made $374 profit. It's won every trade except one. And for this one, I'll actually show you on the next screen. The trades are typically being closed in about, let's see here. Oops. Yeah, about 19 hours. I checked was the average length. So you'll see right here, though, for example, this is one of the basically analytical tools that you can have running on your account. And it'll tell you all these cool little details of all the trades that happen on your account. So you can see there's a trade that closed in 4 minutes. That one closed in 6 minutes. That one took almost 19 hours. Another one took 1 hour. Another one took 24 minutes. One took 1 day. One took 19 hours, 17 hours. So basically for this whole trading account, on average, I don't know why it's being very temperamental for me to shift this over to the left. There we go. Okay. So yeah, essentially what I'm trying to say is because these trades are typically closing in 19 hours, that's the average time, that is less than 24 hours. So daily compounding is a fair approximation for this trading account, right? And you can actually see right here, this is going to be a little bit more complex for those of you who are brand new. So if you've never done anything with Forex or trading before, then what I'm about to say for the next 20 to 30 seconds may not make sense. That is totally okay. Just stick with me and we'll continue. But for those of you who do have a little bit more knowledge, you'll see right here the trading volume, which is the size of the trades. This is basically the lot size. You'll see it is slightly increasing, right? Which means that the trade size is getting a little bit larger. So you'll see like this one was 0.34, the next one was 0.35, and another one was 0.35. And they're a little bit out of order because some of them open and then close at different time frames. But essentially you can see that this one was opened as a 0.34 lot size, and then it got a little bit bigger, the next one 0.35. And then right here, this one was 0.69, and you can see the next trade that was opened after that was 0.7. So that was like a little bit bigger. So you can see the trade size is also growing as well, showing that, this is compounding essentially. So yeah, let's talk about really quickly, like, why is this better? At least, you could say it's not objectively better. You could say that's an opinion, but I feel very strongly that this is much better than the compounding that stocks, indices, and other investment vehicles like S&P 500, VOO, traditional investments offer. Why is this better, right? Why is daily compounding better? Well, for me, it's because typically earnings are compounded quarterly or yearly in these other traditional types of investments. And when I actually called my old 401k brokerage account company, and I asked them like what type of compounding my account was, because I wanted to know, because I am interested in building my wealth. They literally told me on the phone they didn't know. They just said, we don't know how often it compounds. So that it's kind of a joke, kind of BS to me. But anyways, yeah, so I prefer to take charge of my financial future and know exactly what my investments are doing for me and not just leave it up to chance, because reality is like an 8% a year is still just going to make you poor in 20 to 50 years after inflation. So I would rather do 10 to 30% a month compounding with this. Okay, so let's go ahead and actually dive into the daily compound calculator. I want to show you real quick just to illustrate an example. So some of you may be familiar with this website. There's plenty of calculator websites. It doesn't have to be this one. But what we're going to do is I'm going to do the daily compound, and there's a Forex compound right here. And I don't know what mathematical formula they're using for that specifically, but it's not really like accurate, or there's some discrepancies that I've found. So I prefer to just use the daily compounding as an accurate estimate of what a daily compounding scenario would look like for a Forex account. So let's just go ahead. I'm going to run through some examples and show you just the sheer power of compounding alone. So let's say we start out with $5,000. And the way that we're going to do this, even though it is daily compounding, I'll walk through how I'm going to adjust this to actually make it accurate. Okay, so we're going to use the daily compounding, and you can do this for yourself. And in fact, I actually recommend that you do this for yourself. Play around with different scenarios with different principal amounts to just see what this could mean for you, right? Because it's really cool. I don't know why, but I freaking loved doing this stuff like all the time when I was like younger. And I mean, I still do this all the time too. Just play around with like this sort of calculator. So yeah, let's start with like, let's say $10,000 or $5,000, just that, you can see how many zeros there are clearly. Interest rate, let's pick monthly, even though it's going to compound daily, but we're going to just pick a monthly rate. So we'll do 30. Just to illustrate, I actually have a bot that is doing between 25 and 35%. So, 30% monthly is fine for that one. And then let's just go ahead and do 1 year, right? And just see what happens. One very important thing, you need to select include all days of the week. You need to do no, right? Because remember what I said earlier in the video, the Forex market is not open Saturday or Sunday. It's essentially Sunday night through Friday night-ish. So really it's open 5 days. So we want to make sure that this is how it's set. Sunday and Saturday are not selected. And then daily reinvest rate is 100%. That is fine. And then, yeah, just leave this as none, no additional contribution. So let's just calculate it. Okay, so if we have an initial balance of $5,000, after 1 year's time, that investment is going to be $64,000 using a 30% per month compounding growth rate, right? And if you actually go down further, you can see like what your earnings would be each and every month. And you can see, it's kind of growing, which means that it's compounding. And then at the very end of 1 year, that $5,000, that initial $5,000 you put in has become $60,000 basically, or 64. So yeah, let's try a cooler example. So let's say you go a little bit bigger, you put 70 grand in your account, and then let's let it sit for 2 years, okay, instead of 1 year. So then it becomes $11 million. So that's crazy. Like I said, it accelerates at a growing rate, right? So the longer you leave it in and the longer you let it compound, the more and the faster it actually grows. So right here, yeah, you can see initial balance 70,000, right here 11,000, and then you can see all the monthly earnings, right? So each month, this month 5,000, then 19, and you can see each month it's earning more and more and more until it gets kind of crazy, right? But this is way later, like 1.5 years to 2 years, right? And then it starts earning like over $1 million in a month. And I know plenty of people who are making, $1 million with a month with Forex, which is pretty cool. So it is real and it is out there. So with that in mind, if you want to get in at the lowest price, I actually have 4 beta spots currently open to use my trading bots. If you're interested, you can go ahead and click the link in the description down below, fill out the Google form. The Google form is going to look like this. And yeah, just fill it out honestly. And then I will pick 4 people who are going to be able to access my bots at the lowest price, right? So there is an investment to get started, but it's very fair and it's going to be the lowest price that it's going to ever be offered at, because I'm just going to increase it after we go through this beta period. So if you are interested in learning more about it, or you already know you want to do it, then go ahead, just click down below, fill out the application honestly. And yeah, as soon as we have more than 4 people, or as soon as we have 4 people, then I will, I'll go through all the applications. So go ahead. I would get that submitted immediately, because I'm also going to post this on my other social medias, and probably within 24 hours, I will have more than 4 people apply. So I would do it right away. Here is an example, by the way, of the bot that I'm going to show you like some statistics of the bot that you'll get access to. Okay. So it is almost all, essentially it's all algorithmic trading. All of the trades, 99% of the trades have been profit or have been winning trades. 1% of the trades have been lost trades, which is pretty darn good. You're never ever going to find anything that's 100%. It's just not possible. Right. And then maximum drawdown. If you don't know what drawdown is, it's essentially like your floating profit and loss. So yeah, I just think I should actually make a separate video to explain what drawdown is. I'm not going to try and rush it with that, but essentially, I think that's a very good drawdown rate, especially for something that has like 30+% returns. Okay, so then here is the these are like the monthly profit, like the monthly growth basically. So September, which is when it started, so that wasn't even a full month. October did 42%, November 20, December 36, and then let me zoom in over here. January did 46%, February 24%, March 34%, 29%. And then so far in June, as I'm filming this, it's June 18th. We're only halfway through the month. It's done 19%. Okay, and again, this is compounding essentially daily in the way that I approximated earlier in the video. So if you are interested, then go ahead, click the link down below, submit your application in the Google form today, and I will get back to you ASAP. And thanks for watching the video. I hope you enjoyed this. I hope you learned something about how powerful and important daily compound, or excuse me, just compound interest in general is. And yeah, I wish you all the best of success on your investing journey. Be sure to leverage compound interest as soon as you possibly can, because you can see right here, the earlier you get in, the sooner you're going to experience the benefits of it. So thanks for watching. Love you all, and I'll see you in the next one.